In today's video, we're going to discuss Yieldmax's new fund, BIGY, and whether or not we should use it in our income portfolios. Yieldmax helps us earn over $500,000 per year in dividends, as you can see below, and our performance shows that we're up 50% for the year. We're up 49.59%. We're up 0.57 today, or 10,000. So we're going to be up over 50% tomorrow after these gains register. And the S&P's up 26, the Nasdaq's up 28, the Dow's up 19, and the Russell's up 19. So we're up 50% for the year, and the Nasdaq's up about 30% for the year. The reason why we're beating the markets by almost twice is because I used some margin to get ahead. As you can see here, this $700,000 in margin debt, I used that to get ahead because all of the greats use debt to get ahead. So we're using some margin here at my channel and Yieldmax. Of course, we're also using Cornerstone, but we'll get into that later. And we're using these funds to live financially free out of our brokerage accounts. If you need help doing the same, email me for my e-guides at akintodd48@gmail.com. So Yieldmax just launched this new fund, BIGY. It's an actively managed ETF that seeks a target annual income level of 12% and capital appreciation via direct investments in a select portfolio of 50 large companies. So I thought this was kind of interesting because I actually have been using my margin to add blue chip names to the portfolio. Okay, the top weighted names in the indexes, I like to buy the same names. Okay, so if you look at the Nasdaq here or the S&P, you'd see that the top holdings are here. And if you look at the top 30 to 50 names in the indexes, you'll see that these are about 30 to 50% of the indexes as well, okay, whether it's the Nasdaq or S&P. So I have all these stocks in my portfolio. That's why I've been running up my margin debt lately. If I'm earning over $500,000 in dividends, they always ask me, why isn't your margin debt falling then? Well, I've been adding these blue chip stocks on the dips because not only are they great stocks that have dividends and they knock down my margin and knock down my margin interest, but they also give me growth that offsets Yieldmax decay. All right, so I want these blue chip stocks in my portfolio so that I can, again, offset Yieldmax decay and still get dividends safely. All right, I want days gains, which as you can see, we're up 10,000 today, which was due to Cornerstone and these blue chip stocks. I want days gains, which then offsets Yieldmax erosion. But then Yieldmax came out with this BIGY fund, okay, BIGY. And again, it is the top 50 stocks and it's going to give you a 12% yield. So for me, that's not really competitive with Cornerstone. First of all, okay, you all know that I love Cornerstone, but I want to get into some more theory on BIGY in a second. I just want to share with you Cornerstone. If you don't already know about Cornerstone, it is a 4-star fund, and as you can see here on its 10-year chart, it moves upward, left to right. Look at this move that Cornerstone's had recently. That's because its premiums are over 34% now, and more people want these premiums, I would imagine. So when you drip the 21% dividend with Cornerstone that it gives you, okay, it gives you a 21% dividend, it drips it down at the NAV for 34% gains every month. Okay, that's why I'm doing so well in my account. It's because of Cornerstone. I have over 400 grand in Cornerstone. That's why we were up big today. Once again, it was Cornerstone. I mean, here it is today. It was up 0.63, and if you look above, the S&P was up 0.61. So CRF beat the S&P today, and look at this 1-year chart. It's been beating the S&P on a 1-year chart with the 20% dividend, and it drips it down at the NAV for 34% gains every month. So here's the 10-year chart of Cornerstone on an E-Trade chart, and it moves sideways to down, unlike with the 10-year chart on Morningstar, okay? That's because you have to factor back in dividends, drips, and rights offerings. Play Cornerstone properly around its rights offerings, okay? If you need help playing Cornerstone, that's in my Volume 4 e-guide. When you buy my e-guide, you get free access to Discord for life, where we alert you of the Cornerstone rights offering announcement, so you don't have to worry about missing the rights offering announcement, okay? We also have over 1,000 members here in the Discord chat room who are on top of this rights offering announcement, okay? So once again, Discord is free for life when you buy my e-guides. So BIGY's 12% yield doesn't really compete with Cornerstone, and Cornerstone gives you the entire index. So that's why I like to have all of my money behind Cornerstone. It's because it is the index. It's been around since the 80s. How can BIGY really compete with that? Well, anyway, let's dive into BIGY's holdings, okay? If we download all of the holdings for BIGY, you can see here the top 50 holdings. They have Apple, AbbVie, AMD, Avgo. We've actually been making videos about them recently, okay? The the last semiconductor video we made. We covered AMD and Avgo, if y'all remember that. So we have the top 50 names for Big Y, okay? The top 50 names here. We own, again, most of these stocks in the portfolio, and that's why my margin debt has risen to $700,000. Now, does it make sense to have all the stocks in my portfolio, or should I just go with Big Y? Well, the big problem with Big Y is that it's 50% maintenance, okay? CRF is 30% maintenance. That's why I could put so much of my money behind Cornerstone, and it is the index, once again, so I can sleep safely at night. But with Big Y, it's only the top 50 stocks, so that's going to give you some cause for concern, because what if the top 50 weighted stocks want to fall for whatever reason? Okay, so you have to keep that in mind. It's not the full diversification of the index like Cornerstone gives you, and Cornerstone, again, is 30% maintenance, but Big Y is 50% maintenance. Okay, let's do a check of Big Y. Big Y, ticker symbol, maintenance, it is 50%. If you need help understanding maintenance, that's in my Volume 3 e-guide. So maintenance is the key to everything that I do here. For every $1 you put in your account, you get $4 of purchasing power. I'm just using a small amount of my over 1 million in purchasing power. So since my account is over 1 million, they give me 4 million of purchasing power. But since I'm using 700,000 of that purchasing power, it takes up a lot of my available withdrawal. So I have to keep this available withdrawal number high in order to withstand margin calls and live freely out of my account. We're living the FIRE lifestyle here at this channel, which means financially independent, retire early, swipe my E-Trade card and go wherever I want in this world. I can buy cars, clothes, shoes, whatever I want with my E-Trade card, and it's at lower interest than credit cards usually, because I've negotiated my interest rates down twice, okay? I always say at this juncture, when you buy my e-guides, you get my phone number for life. So you get Discord for life when you buy my e-guides, and you get my phone number for life when you buy my e-guides. And so I'll walk you through whatever questions you have on your portfolio, and whenever you're ready, you can negotiate your rates down with the script that I have. I'll text it to you. All right, you don't have to have lower margin rates when you're using this strategy, because a lot of these dividend funds have higher dividend yields than the margin interest that we're charged. So there's an instant arbitrage opportunity when you use margin with these dividend funds. So should I go with these blue chip stocks, which adds to my margin debt? It added around 200,000 of margin debt. Well, most of these blue chip stocks are 30% maintenance, whereas Big Y is 50% maintenance. So that means that with $200,000 invested in these blue chip stocks, that's only taking up 60 grand of my available withdrawal. But if I use 200 grand of Big Y, then it's going to take up 100 grand of my available withdrawal. Again, we need to have our available withdrawal high in order to not only withstand margin calls, to also be able to pay our bills, because all of my bills are automated out of my E-Trade account. So we need to keep our available withdrawal high, withstand over 20% corrections at all times. And the way that I do that is I keep my maintenance low, like I already described, and I always keep my put options on just in case the market has a crash overnight. Of course, my dividends pay back my leverage in around 1 year, so I'm never worried about my leverage because it goes away in around 1 year. But if we were to have a crash overnight, well, then my put options would make me more money than I potentially lost in a crash. If you need help insuring your portfolio with put options, that's in my Volume 5 e-guide. I also sell put options. As you can see here, I gained about 50,000 in premiums just from selling these put options, which then lowered my margin by 50 grand. And it also lowered my risk, because when I sell these put options, I get more premiums in the process, which lowers my cost basis, okay? If I get a sign in these puts at the lows, well, then we make more money going up on the upside. If we go higher in these puts, well, then we just collect these premiums of around 50,000, which then again lowers our margin by 50,000 and grows our account by 50,000. If you need help selling put options like I do, that's in my Volume 6 e-guide. All right, so what am I going to do? Am I going to be buying more Big Y because of this new fund? Should I just use Big Y to replace all of my stocks? Well, I don't think I can, because first of all, I think I can get better returns from these stocks, because stocks have a higher beta than the indexes. And if I'm using these stocks with the 2 to 3% dividend yields that they average, I think I can beat Big Y, because I can get 2 to 3% on average with the dividend yields, plus the stocks move higher than the indexes. Again, the beta is higher with a stock, and I'm buying these stocks on dips. So I think I can get potentially 10 to 20% returns with the stocks on average, because that's kind of what they average per year anyway, most of these blue chip stocks. And I can get these dividends, which grow usually every year as well. So I want these stocks because I can outperform with these stocks, I believe, but most importantly, these stocks save me precious available withdrawal while outperforming at the same time. That's how we outperformed today. It was because, again, of these blue chips and Cornerstone funds. All right, so if you need more help doing what I'm doing, email me for my e-guides at aikandtodd48@gmail.com. When you buy my e-guides, you get free access to Discord for life, and you get my phone number for life, so keep that in mind. We're also at 50% for the year living financially free out of our brokerage accounts. All right, if you like the video, click like or subscribe, and I'll talk to you soon, everyone. Thanks.